The Bank of Korea raised its growth forecast for the local economy yesterday while leaving the key interest rate untouched, as widely expected. So with the country seemingly on a strong recovery track on the back of an ongoing global economic recovery, we're going to sit down with an expert to take a closer look at global and local stock markets. But before we get to that, here's our Kim Hye-sung with an overview of yesterday's central bank meeting.
The Bank of Korea raised its growth forecast for the local economy for 2018 to 3%, up 0.1 of a percentage point from its previous projection made in October.
Global economic growth has accelerated in both advanced and emerging economies. Korea's domestic economy is expected to continue its solid growth on the back of strong exports and improving consumption, although investment has somewhat slowed.
The central bank lowered its consumer price projection by 0.1 percentage points to 1.7%. It says there are upside and downside risks for inflation. Rising global oil prices are pushing prices up, while the Korean won's rise against the U.S. dollar to its strongest level in more than 3 years is starting to weigh on import costs. With December's core inflation rate below the bank's target of 2% and household debt still growing, the BOK kept its benchmark interest rate unchanged at 1.5% Thursday. This freeze comes after the bank's first rate hike in over 6 years in November.
The rate freeze this month was widely expected. For one thing, inflationary pressure has eased, but also the bank is waiting to see what other countries do with their monetary easing policies before making a move. The fact that Governor Lee Ju-yeol's term is set to end this March was also a factor.
Experts say the central bank is likely to raise rates gradually this year, sometime in the second quarter or later, after policymakers have had more time to assess the impact of the first increase and get clearer signals on the inflation rate. Kim Hye-sung, Arirang News.